So let's take a look at TLRY. And here we're going to grab a chart, see how the stock reacted to earnings. So that we're going to look at the magnitude of the historical magnitude of the move up or down versus what the options implied the day before. Okay, so these bars here, right, you see them starting at 0%, they're going up and down because that's the straddle. That's what the options implied. The red is what the actual move was when it was to the downside. The green, like over here, that's when the actual move to the upside. So here, let me just take a look here. As an example, November 9th, after the market closed, TLRY reported earnings. Next day, that stock was down 17.5% for the day. The straddle was implying a move of 22.3%. So you could see, even though it was a huge move, 17%, that straddle was pricing in 22%. So that move was actually within that implied range. So I'm going to just come up here, see the stats for TLRY. So 90 out of the last 12 quarters, 90% of the straddles overestimated the move. I'm sorry, this is last 10 quarters. I guess we don't have full 12 quarters in TLRY here. Last 10 quarters, not sure how long. TLRY might have not even been public for that long yet. So out of the last 10 quarters, 90% of the straddles overestimated the move. The average move implied prior to the earnings was 16.7%, up or down 16.7%. The average realized move, actual move in absolute terms, was 10.4%. So we see there's a 6.3% differential between implied and realized. Okay, so that's from a historical perspective. Let's take a look at what the implied volatility did. So here we're looking at implied volatility crush, but we're looking at a 30-day option, 30 days to maturity. So the very near-term option, that's more gamma. You're looking at the move. As you go out further, there's more vago or more risk to implied volatility. So we use the 30-day as our benchmark. So we see here, on average, the implied volatility day after reporting earnings, it was down 16%. So day before earnings, average implied volatility was 113. Day after, implied volatility on average was 95.6. 5 days later, 95.4. So kind of stayed steady here. But today we're at 215. So way above that historical average. So here we are right now, 215. You could see historically where, and this has been all over the map. So you could see the range here. 215, that's the high. In the last 10 quarters, it was as low as 75 over here. All right. This is where it was on average the day after. This high is 132, low 157. So keep in mind that's the average drop, but right now we're very high. So let's just take a look, what TLRY did since it last reported earnings. Okay. Actually, before that, let's take a look at its last reported earnings. So I'm going to look at this earnings per share estimate versus actual. So we see here November 9th reported earnings. It was analysts' expectations were losing 21 cents earnings per share. It lost 2 cents, so that was better than expected, right? It didn't lose as much as the analysts were consensus. Revenues, the consensus 54.9 million. It came in at 51.4 million, so it missed on that. Stock was down 17.5%. Again, one thing to keep in mind that the stock price does not reflect. So why would this happen? There are two reasons. One is the stock price does not reflect the analyst expectations, right? Whoever, there might be 4 or 5 analysts, 10 analysts. The analysts do not set the price. Those are the traders, right? The traders, the stakeholders, the risk takers. They're the ones, that's the stock price is reflecting their expectations, okay? Not analysts' expectations, but the people who are actually trading expectations. And they could vary by a lot from what the analysts think. The other thing is when it reports earnings, this is not the whole story. The earnings per share is just one metric. It's what's behind the number. People who invest in stock, they're investing based on future expectations. So, well, what does this number reflect, right? And what is the management saying about the future outlook of TLRY? So those are important things to keep in mind. So let's just take a look at what TLRY did since its last reported earnings, just to get a sense of where do we think, are people pricing in an optimistic or pessimistic view heading into earnings. So I'm going to go here to post earnings drift. And before we look at this, this is what it's doing. Since when the stock reports earnings right away, the traders get to see the numbers. They get to put those numbers into their models, listen to what the management's saying, fix their expectations, reprice it. So that day, usually it'll reprice based on the new news. However, between earnings, there's about 3 more months, right, until the next earnings, and the stock will drift, right? It'll reprice, but then it could drift higher, could drift lower. And that's really based on traders' expectations, investors' expectations, how we're doing moving forward. So let's take a look at the drift since it last reported earnings. This green guy is representing the drift. So we're up 315% from the last reported earnings. So here, here last reported earnings, you could see here the drift before that was up 45%. Stock reported earnings, it was down 17.5% that day. I'm hovering over it. As you can see here, it closed at $8.33. Reported earnings, day before reported earnings, it was $10.10. Reported earnings, it closed at $8.33, down 17.5% that day. Now we're at $32.50. Okay, so we're up 315% since the last reported earnings. So people are building up expectations heading into the earnings. Typically, if we just looked at the averages between drifts, it actually lost 4.8%. And a 1 standard deviation move, up or down between earnings, is 22.3%. So even though it moved a lot in between earnings, an average 22%, up 315%. So that's, when you just see it in standard deviations term, up 14 standard deviations. We only have a 10, we don't have a very long history here, but that's how it compares in the last 10 quarters. So there's optimism being built in, right? So we need to hear probably something positive, maybe not even on the earnings front, but maybe something where the management can tell us about changes in legislation, changes in competition or in their market. But you could see here, based on this, traders are looking, optimistic heading into earnings. Well, we're right at 9:30, but let me just take I don't think we have time for this, but just really quickly, you could see here, heading into earnings, historically, the stock tended to run up into earnings, especially 1 week into earnings. You could see here, on average, gain 9.7%, up 80% of the time. After earnings, didn't do, historically didn't do that well. Day of earnings and heading out of earnings, it tended to weaken a little bit. So we're at 9:30. I'll let everybody go, but try to cover as much as we could.